Good morning. You're watching Businessworld Live. I'm Jess De Los Santos. The World Bank has raised its growth forecast for the Philippines this year to 5.3%. That's from an earlier projection of 4.3%. Now, fresh data also showed that the country's employment situation as well as COVID-19 recovery efforts have improved. Now, gains in these indicators seem to be pointing to an economy on the mend. Mobile journalist Pamela Vasquez has the rest of the story.
The Philippines jumped from 103rd to 57th place in the latest COVID-19 recovery index by Japanese newspaper Nikkei Asia. That's a total of 46 spots in a span of 1 month. The index measures the country's progress on infection control, vaccine rollout, and mobility.
Is a clear indication that we have successfully contained the highly transmissible Delta variant. We can see the light at the end of the tunnel.
Indeed, the economy is showing signs of a recovery. Just released figures from the statistics agency show inflation for November came in at 4.2%. That's the lowest in 4 months. The PSA also reported that unemployment slipped to 7.4% in October, down from 8.9% in the previous month.
Makikita natin talaga ang effect itong month ng November. But we are already seeing a reduction in unemployment rate from September to October 2021, and that is significant.
In line with this, the World Bank expects the country to grow at least 5.3% this year, higher than its initial estimate.
One, it comes from the firms that have closed. We have this May 2021 firm survey that was done, and it shows that around 10% of firms in the Philippines have already closed due to the pandemic.
The World Bank noted that the Omicron variant added a layer of uncertainty to its projections and stressed the need for progress in vaccinations. Mobile journalist Pamela Vasquez, We Are One News.
Local shares rose on the back of those improvements in economic indicators as well as waning Omicron concerns. A last-minute buying pulled shares higher by close to a quarter of 8% to 7,147. That extends the benchmark's rally for a fourth day. No trading action today in observance of the solemnity of the Immaculate Conception of the Virgin Mary. But elsewhere in Asia, regional stocks started the session higher, keeping track of gains in the US. It's after tech shares pulled off their biggest rally in 9 months. As you can see in the upper chart right here, you have the S&P 500 and the NASDAQ closing off the trading day higher by 2.1% and 3% respectively. That's their biggest gains since March. In Asia, gauges in Japan, South Korea, and Australia following suit. This traders bet the Omicron variant won't be hampering a global recovery. As you can see, the topics and the Nikkei, both in the green here, topics up 0.7%. The Nikkei also increasing by close to 1.2%. Korean stocks here, the Kospi up over 8%. Same scenario for the S&P 200 or Aussie stocks here, gaining close to 3/4 of a percent. Now let's see markets get. But once again, let's see if the markets will get to maintain the upside throughout the session. If local markets will mirror gains as session resumes tomorrow. Now, here are other headlines we're keeping our eyes on. Foreign investment pledges declined in the third quarter. That's after recovering in the previous 3-month period. PSA data show that approved foreign investments declined by almost 46% year on year to about 16.8 billion pesos in the third quarter. This is a reversal of the 45.5% growth posted in the second quarter. However, the annual decline was smaller compared to the 83% plunge seen in the third quarter of 2020. Now, only 4 out of the 6 investment promotion agencies were able to secure investment commitments from foreigners. These include the PEZA, the Board of Investments, the Clark Development Corporation, and the SBMA. Now, amid weaker than expected levels of foreign investment, the electronics industry is calling for a review of the fiscal incentive system under the CREATE law. CAP President Danilo Lachica praised CREATE for reducing the corporate income tax, but Lachica said that the government should revisit incentives for investment growth. He noted that our country's FDI pales in comparison to its ASEAN neighbors like Indonesia, who got 13 times more FDIs compared to the Philippines in 2020. However, Daniel Alexander from the Australia New Zealand Chamber of Commerce of the Philippines warned that the government should be cautious about making any changes to PESA. But Trade Secretary Mon Lopez remains confident that the country remains a premium investment destination in the region. This as it ranks among the highest exporters in nearly 200 types of products. And Finance Secretary Sonny Dominguez is calling on the Labor Department to use digital channels to aid workers more rapidly during times of crisis. Dominguez said the agency should assist workers to cope with the pandemic and with the new labor demands of a digital economy as economic recovery accelerates. The official added that the Labor Department can build on the business wage subsidy program run by the DOF. Meanwhile, industry leaders are seeing cryptocurrency taking on a bigger role in remittances, payments, and even online games. And the fintech's place in the growth of cryptocurrencies forum, speakers said more people are becoming aware of the opportunities and risks of crypto and are now more willing to try it as an asset class. With economic numbers showing that the economy might very well be on its way for a rebound, are fears of the Omicron variant going to stall recovery? Let's get insights from economist Professor Ronilo Balbieran of the University of Asia and the Pacific. Good afternoon, sir. Good morning, rather.
Good morning,
I've been
Jess. Good
used,
morning.
I've been used to the afternoon broadcast. That's why. But
Yes.
you see, taking off from our first story this day, I mean, it's quite clear, of course, no economy is still out of the woods as we speak. But is the Philippines finally seeing the light at the end of the tunnel out of this COVID-induced slump?
Well, the recent data, the recent releases, already confirm that we are seeing the light at the end of the tunnel. So the only question is how fatal is this new variant is. No? But be that as it may, we are already seeing the light at the end of the tunnel. So, as we have previously projected from our previous conversation, we are already on our way to a stronger, faster recovery for the rest of the year, and in fact for 2022. So, inflation rate is going down, and unemployment rate is going down, and we expect more money circulation in our economy, more spending from more members of the family, and therefore that will spur economic growth across all sectors. And so we look forward to an even faster GDP growth and an even slower inflation as our business supply chains normalize, and as probably oil supply and demand normalize, and we will have cut the oil prices even lower to support more economic growth.
Okay, we'll go through those indicators one by one later, but interesting that you noted how you're seeing a faster recovery even through 2022. And this has been quite a scenario here. I mean, a lot of the economists painted a gloom and doom picture while we were sailing through 2021, a number already making a turnaround, including the World Bank. Are you seeing the same? And when do you expect us returning to pre pandemic levels?
Well, if we're talking about wiping off the negative 9.5 to 10% of 2020, so we are close to by the end of 2022, and probably 2023, first half 2023, if we are really seeing the actualization of this faster and stronger GDP growth, then we would have wiped off that negative 10%. No? So if we are able to grow at 5 to 6%, our numbers show convergence towards the 5.4, 5.3 to 5.5. So we are getting a narrower bandwidth for the full year of 2021. So as again, as World Bank confirms, it's they're seeing around 5.3%. We can actually see a higher range at 5.7, and then around 6 to 7%. And in fact, we can still grow at 8% by 2022. So we would have actually wiped off that negative 10% that we experienced last year. So we look forward to that particular strong recovery. So by 2023, we're back on track. No? So.
Mhm. Okay, let's see if numbers are indeed going to surprise for full year 2021. But let's go through those indicators that you mentioned earlier. First, on unemployment. I mean, all things considered, that is to 7.4%. But still, that's quite far from a pre-pandemic levels of around 5%. When do you see us getting there, and what's it going to take?
I think by December we would have gotten there, no, at 5%. So remember, this is an immediate impact of us lowering down the restrictions on mobility, and therefore we are happy to see now it is more direct and actually more immediate impact from the lifting of the lockdowns. So with that particular short impact, no? Immediate impact of the lowering of the restrictions, and immediately we get this unemployment rate, and therefore by December, I hope that we will have an unemployment rate at around 5 to 6%, no? So or even 5%, because we have allowed mobility, we have allowed movement, and therefore this will increase the business confidence, and therefore this will give more income for our consumers because they are now employed, and therefore this will actually jumpstart and actually accelerates the movement of money that will actually catalyze the whole economic activities for the country.
All right, let's see if those numbers are going to be realized for the month of December. But another data which came out yesterday, inflation that eased for another month, but still higher than government target when you put it at year-to-date levels. How likely is it that the inflation targets will be missed there, and how might this impact the Banco Central's policy stance?
Well, this actually confirms our previous projections that this will continue to go down, despite the concerns in oil price increases, and therefore this is actually in line with our previous conversations, and in fact also in line with the projections of BSP. So the initial trajectory that we mentioned is around 4.2%. I believe we're still on track for the 4.2% full year inflation. And therefore, it's not so bad as a 0.2% above the 4% target of the government. And therefore, by next year, we will see a much lower inflation for the first quarter of 2022, and therefore we can forget about inflation issues for the next 6 months.
Okay, speaking of price pressures from oil a few days back, we just had a big time rollback. Are you finally seeing a downtrend here?
Yes, and therefore that will actually wipe out the the components that are actually driving our inflation at around 4.2. So basically, the core inflation is already at 3%, and therefore, if you wipe out that particular oil price component of inflation, and then we can see a normalization at around 3%, 3 to 3.5% of our inflation rate, and this will be very good and will fuel a much faster economic growth for 2022. And
Okay.
we can already expect that particular inflation slowdown will actually push us towards the level of 6.5 to 7.5% GDP for 2022.
Okay, lastly, let me close off our discussion with a talk on Omicron here. Worry somehow ebbing over reports that its impact could be milder than the Delta variant, but still, or should we be worried?
Well, we are seeing some conflicting reports, but we are hoping that even if Omicron is more infectious, some say that this is less fatal, and therefore we are hoping and we are hanging on to that particular medical observation, and therefore we are hoping that that won't affect the level of restrictions for our economy, and I hope that we do not go back to locking down our economy because this will definitely delay our economic recovery. So I'm hoping that our vaccination rate, especially with what government has accomplished in the last few days in terms of massive vaccination and our level of immunity, and therefore we don't have to lock down our economy and continue uh, pushing our business sectors to employ more, and therefore we can have more purchasing power for the rest of our people, and therefore uh, we should be seeing an economic growth for 2022 that we
Mhm.
haven't seen for a long time. So I'm very optimistic about 2022, and this will be the surprise of our lives if ever Omicron is not that fatal.
Okay, at least a good note to end the discussion with optimism really high coming into 2022. Thank you very much for your time this morning, Professor Ronilo Balbieran, an economist from the University of Asia and the Pacific. Thank you, sir, and
Thank,
stay safe.
thank you, Jess.
And that's a first look into the biggest stories from the economic and corporate front this Wednesday morning, December 8, 2021. Catch Business World live again at 3:15 p.m. today. I'm Jess De Los Santos. We are One News, mask on, wash hands, and stay safe, Philippines.